Hello and welcome to Markets Fatafat, and it's a dull day for the market. This is Mansi Dave and with me is Kanishka Sarkar, and over the next 1 hour we'll tell you about all the stocks that are buzzing in trade today, and we also have experts and our research with us. We have Rabinder and our expert Laxmikant Shukla who will join with us. To start with, Laxmikant, hi, good afternoon. A dull day for the market. How are you viewing the second half of the market at present, and what is the strategy?
Good afternoon to you all. So since last 3 days we have seen consistent fall in the market after reaching near 25,450, and it is acting like a strong resistance, and even Nifty has not surpassed its previous day high. So we expect some weakness in Nifty, and now we will think that if it fails to surpass the levels of 25,250, then we will see further decline in Nifty toward the levels of 24,900, where we are viewing as the strong support due to the presence of 50% Fibonacci retracement of its September rally and the central band of Bollinger. So I think 24,900 could act as the strong support, and from where we will see pullback move in Nifty, but for further gaining strength it needs to surpass the levels of 25,250 soon.
Alright, so those are the levels to track for Nifty, but then let's get started with all the top buzzers in trade today, either on the back of news flow or on the back of technicals. First up, let's talk about Mazagon Dock, which is in focus today. Now, this one is in the spotlight after the company has signed an MOU with Guidance Tamil Nadu to explore the development of a world-class greenfield shipyard on India's eastern coast. Now, the agreement was inked on September 19th between Mazagon Dock Director of Shipbuilding, that is Biju George, and Guidance Tamil Nadu's MD and CEO, Dr. Darees Ahmed. This was at a ceremony organized by the Ministry of Ports, Shipping and Waterways in Bhavnagar, Gujarat. So that's the reason why this stock is in focus. Now, this move marks a major step in Mazagon Dock's expansion, positioning it to strengthen India's shipbuilding capabilities and tap into future maritime opportunities as well. And hence, this stock is in focus, trading more than 1% higher right now.
Shipbuilding space in focus, and you see the Mazagon Dock, Cochin Shipyard, all of those stocks in green at present. But then talking about banks and financials, Laxmikant, I want your view on Canara Bank. This session is witnessing around a 1 or 1.5% gains with 123 levels. Do you see a technical bounce in here? Because in last 5 to 6 sessions, it has grown around 5 to 6%.
Our view is quite strong in the Nifty PSU banks, and from that space I have picked Canara Bank because this bank has given inverted head and shoulder breakout on the weekly chart and still sustaining above that neckline of inverted head and shoulder breakout. So we expect that this upside move will continue in Canara Bank, and we will see further positive momentum toward the levels of 132. So as long as it holds the levels of 117 to 115, I think this positive will continue, and we will see a strong upside move in Canara Bank toward the levels of 132.
Alright, so 132, that's the level to watch for Canara Bank. But on that note, we'll take a very short break. Be right back with more top buzzers on the other side.
Industry. Shipping stocks are upbeat as sources say the cabinet has approved 3 schemes for the sector with financial assistance of more than 65,000 crore. Prakash is joining in with more details on the same. Prakash, over to you.
Yeah, it's a very crucial development for the shipping sector, as sources are indicating that the Union Cabinet has approved 3 flagship schemes for shipping sector. In fact, the entire value chain will be developed. Approx rupees 70,000 crore has been approved by the Union Cabinet as a financial grant that will be provided through these schemes. If you look at the structure of this scheme, the Cabinet has approved Maritime Development Fund, Shipbuilding Financial Assistance Policy, and Shipbuilding Cluster. So these are 3 important schemes which have been approved by the Union Cabinet with an outlay of rupees 70,000 crore. If you look at the financial assistance, Shipbuilding Financial Assistance will get rupees 25,000 crore. Similar amount will be provided for Maritime Development Fund, and approximately rupees 20,000 crore has been earmarked for shipbuilding development. The objective is to provide financial support to develop entire value chain ecosystem in the shipping sector in next 5 years. In fact, the finance minister has already announced this scheme in the budget for financial year 2025-26. And today, what the sales associates are confirming that the Indian cabinet has given its nod to these proposals. At around 3 p.m., there is a formal briefing by the government where formal announcement will be made. Back to you.
All right, thank you so much, Prakash, for taking us through all those details. Shipping sector in focus on the back of those 3 schemes that have likely been approved by the government. But on to our IPO Central segment. Now, my colleague Sajid caught up with Lotus's top management on their growth roadmap and utilization proceeds from the issue. Here's an excerpt of that conversation. Let's take a look.
This is a company which formed in 2004. It's a 21 years old company. And both promoters like Manigandan Kuttappan and Ramkumar Sendivil. And we have, the company is based out of Chennai, headquartered in Chennai. And we have branches in 8 different locations in India, in major ports as well as the ICD locations in India. So Lotus is predominantly a freight forwarding company, a logistics service provider company, which is like freight forwarding activity, transportation, customs clearance, warehousing, and distribution. This is the core activity about Lotus. And Lotus is predominantly handling ocean products, which is like spread across different sectors. Renewable is one of our key sectors, and we have other sectors to like add on, like automobile and engineering and lot other sectors, minerals.
Manikandan, you're raising 160 crores in fresh issue. What is the use of this proceeds?
So, objective of the IPO, if you check that, you can see that transportation is a purchase of containers. Like we are planning to purchase the containers and purchase of trailers, both 20 and 40 foot, is the main objective of this IPO proceeds, sir.
Can you take us through what is the current strength of your assets at this point in time, and what is the model there? Are you shifting from an asset light model to an asset heavy model?
Yeah, I'll just go through. So right now we have been holding only 17 trailers of both 20 and 40 foots. When you look at the strength, the total number of volumes we have handled in the last financial year, it comes to like lakh and 12,000 TUs of TUs in the terms, it's a boxes. So total number in the total capacity wise, we handle very few portion of the for our existing customers. When the strength of the fleet goes up, as well as the number of containers purchased increases, we can backward integrated the whole thing into our existing setup, which could add up to the volume strength growth as well as the revenue growth going forward.
What has been the volume growth in the last few years for you, and when you bring in these assets of your own, by how much, what could be the impact on the volumes going forward?
Volumes, if you could say in FY24, we have been doing volumes close to like 59,000 odd boxes, and in FY25, the volumes have, it was FY23. FY24, it is like 90 odd thousand containers, and FY25, it crossed around lakh and 12,000 containers, which is like 18% growth, 18 to 19% growth. So when we do this backward integration with the transportation and customs clearance activity, we could scale up in furthermore volume drive in the future, as well as we can give reliable service to our existing partners and existing customers.
Sir, if you look at the freight rates in the last 2 to 3 years, they have been, they have been volatile in that sense. It went up after the Russia-Ukraine war, and then it's tapered down, and again it is on the verge up. How's your services or the fees that you get for the freight forwarding and other services that you provide for logistics dependent on the freight rates? Is it linked to that, or these are fixed fees and you have an annual increase in these fees?
Sir, if you look at the volume wise, year on year increase is there already. The freight rate, irrespective of the freight rate increase or decrease, the volume standard growth is already there. You can see also the revenue growth as well as the PAT growth is consistent here. So I think the freight rate going up or down going to affect anyway this. And also looking forward looking, you can look at the our investment gets into trailers and containers. This will definitely going to reduce the cost, overall cost to the final customers.
How will it bring in some benefit for you as a company?
So, as you rightly said in your earlier this thing, the freight fluctuations are there, but we have different kind of category customers. Like we have long-term customers where we give them a fixed cost, and a part will be kind of a fluctuating freight rate, which we do spot basis customers, mid-term customers. And but this is how we balance this freight, and we are very positive on keeping this top line and our growth level for the upcoming days.
Freight is like spread across to multiple layers here, sir.
Give me a sense of your trade receivables, because your trade receivables have also gone up in the last 2 to 3 years. You know, if I look at fiscal 25, you had a trade receivables of nearly 106 crores there compared to a 54 crores. So your trade receivables have also jumped from a trade receivable days. It's almost now 41 days or so, which is there. Why is that trade receivables are going up?
So one thing is you could have seen the revenue growth over the period. Like last year it was like 491 crores, and this year you can see that revenue growth of like 941 crores. So number of customers comes in also much higher. The new customer keeps adding to us to the benefit of the company. So such a way, so the revenue growth is like contributing to the total overall revenue, as well as you can based on that you can see that the outstanding time period also just jumps up slightly higher side.
Also to add here, the working capital cycle, which we are currently doing like 30 to 40 days, it is very positive compared with the market.
Very lower when compared to the market peers.
And do you plan to bring down these working capital days or trade receivable days in the coming future?
We are definitely trying to bring down, and so that is how we are trying to strategize our new customer base. So we'll be trying to balance it between the spot customers as well as the long-term customers. So this could positively bring down the working capital cycle going forward.
Can you also give us a sense of the kind of industries that you service to? Because in the last 6 months, we have seen a lot of, shipments or freights moving out of India to the US before the tariff rate came into effect, especially till August, if to be precise. Have you seen a higher volume in that period from between April to August, where you've seen your clients shipping in bulk or front loading their entire shipments before the August deadline?
Yes, as you rightly said, yes, there is kind of a rush, especially before this tariff. There is kind of a rush in doing this exports out of India. And in terms of volume growth, predominantly we do a lot of intra-Asia. So a small portion goes into West. So basically it is intra-Asia, and the volumes are very stable and very promising in this year. And government's policy is also helping us to drive this volume because a lot of capex is getting moved into India and raw materials are getting moved into India. So this is giving us a lot of opportunities in upcoming years together.
So that's our IPO corner, the IPO Central, where we did talk to the management of Glottis, and they were telling about their plans going ahead and the quarters coming by. On that note, we slip into a short break. We'll be right back and talk on other stocks. Welcome back. You're watching Market Fatafat, and let's talk about the stocks which are doing positive rounds on the back of news flows. And we talk about Idea Forge to start with. The company has entered into a joint venture with US-based First Breach to supply its unmanned aerial vehicle in the United States. The stock at present, if you see, is green with around 533 levels. The drone manufacturer, the company which has cleared a joint venture, will undertake the business of licensing, sourcing, designing, engineering, manufacturing and distribution of specific UAVs in the USA, the company said in the regulatory filing. So Idea Forge on the back of this joint venture is on the focus radar.
All right, so that's Idea Forge. But moving on, UPL, that's also in the spotlight today. This is after brokerage firm Antique has reiterated its buy stance on the company and has raised the target price to 760 rupees from 730 earlier. Now, the key re-rating trigger, according to the brokerage, is deleveraging. Now, UPL's net debt is expected to fall from 13,000 crore rupees in FY26 to 10,500 crore rupees by FY27. Bringing the debt to equity ratio down from 1x in FY24 to just 0.4x by FY27. Now, on the operational front, the brokerage says that EBITDA margins are seen improving to 22 to 23% for this company, with the management guiding for 4 to 8% revenue growth and 10 to 14% EBITDA growth for FY26. So overall, divestments, improving margins and debt reduction, these are the factors that are expected to drive re-rating for the stock, and hence UPL is in focus, however not reacting all that positively, down about 1% right now.
Moving on next, and pharma, healthcare and diagnostic is playing the role of defensives even in volatile market. Ravinder, do we have a script from pharma space at present which we would want to discuss?
In focus on the back of brokerage note, where Motilal Oswal has come out with the note and they have maintained their buy rating with target price of rupees 1960. The Motilal said that the new launches, field force addition, marketing spend to drive growth in the branded markets for the Sun Pharma, and company has Sun Pharma targets consistency to outperform in India branded business. They say that the companies have healthy pipelines, field force, scale up to drive growth in the specialty segment for Sun Pharma, and Motilal projecting a 14% earnings CAGR over FY25 to 27, which is led by 17% sales CAGR in specialty segment and 12% in DF and EM markets, and 160 basis point margin expansion for Sun Pharma. So back of this note, Sun Pharma is in focus.
Keep an eye on the pharma space as the markets are volatile and tricky, and when we have such markets, it's the pharma space which plays the role of the defensives. But also keep an eye on L&T because the stock is in focus today, doing positive rounds on the back of a news flow. The company did rise on inking pact with BEL for 5th generation fighter aircraft program, around 1.5% upsurge with 3694 levels at present. If you see, the stock was volatile in trade to start with when the session started, but then the share recovered from days low after the tie-up with BEL for Air Force's AMCA agreement, the program. According to sector analysts, the partnership could give L&T access to long-term defense revenue and boost the present scenario and the development for L&T as well. Keep an eye on both L&T and BL on the back of news flow. The defense and shipbuilding space is already doing positive rounds, and at the same time another news flow coming in connection to L&T. BEL will be the stock also in focus at present.
All right, so that's L&T and BEL, both the stocks in focus today. But moving on, we are also joined by Kapil Shah, the technical analyst at MK Global Financial Services. Hi Kapil, very good afternoon. And Bajaj Finance is the stock that you've picked out for us. In the past 1 month, it has given a good return of about 14%. So do you think this upside is likely to continue?
Yes, first of all, good afternoon to everyone. Bajaj Finance, as far as this stock is concerned, we have been saying that within the financial space, NBFC stocks has been moving on the high side, and this is one of the top 5 companies from the price performance perspective, which is doing well. And this outperformance is coming after the 3.5 years kind of the consolidation patch. And technically, we have been seeing that it has formed the flat pattern breakout that it is going to have. I mean, say it is going through this. So we are seeing the bullish continuation sign further, and right now the stock is at 103. Any decline up to the 1000 level can be a good buy opportunity.
Declines and up till 1000 level is a good buy opportunity. Bajaj Twins, both of them are in focus, but on the radar is Bajaj Finance on our experts' radar. But moving next, Bajaj Electricals. Let's pull up that stock, and on the basis of an acquisition, the stock is on the focus. Let's try and understand what this acquisition is all about from Ravinder.
Well, it's Bajaj Electrical Systems focus on the back of the strong acquisition where board has approved to acquire the Morphy Richard brands and its related intellectual property rights from the Ireland-based Glen Electric and a part of Glen Dimplex Group, and the cost of this acquisition will be 146 crore. So back of this acquisition, Bajaj Electricals is in focus and the stock is up more than 7.5%.
All right, so the Bajaj Electricals that up more than 7% right now on the back of that acquisition news. But moving on, Kapil, you've picked out SBI for us. Where do you see the stock headed from here on?
Yeah, means within the financial space, again, we are seeing that between the private bank and public bank, the public stocks are doing well. And the PSU bank, within that, SBI has broken as a very long duration of falling trend line. So let's say the trend line was since the almost the past 1 year. So it has moved up on the high side. So that is a quite positive bullish development. And we feel it is to be continue on the high side. Right now the stock is trading at an 871 level. The immediate upside potential that we are sensing is up to the 898. So that is near to the 900 level. And on the downside, up to the 860, if there is some sort of correction, it can be utilized as a buy opportunity.
The view on SBI, but moving on, IT stocks are also in the spotlight yet again. They continue to face pressure after reports that Trump administration plans to replace the H-1B visa lottery with a wage-based selection system that favors higher-paid, highly skilled applicants. The move could make it tougher for freshers and entry-level tech workers. Adding to the spotlight, Indian officials are expected to push US trade negotiators to ease access for skilled professionals, including IT workers, during the ongoing trade talks in Washington. That's the latest update that we have. The outcome of these discussions will be very crucial for India's IT sector, where cross-border talent mobility remains a key driver of growth. And hence, today, on the back of this news flow, IT stocks are in focus, all continuing to trade in the red. TCS, Infosys, Tech Mahindra, all trading in the red right now.
Okay, so that's IT sector, and experts do anticipate further correction or concerns, at least in the IT space, and the advice to the market participants is to keep the space on the watch radar and the focus radar at present. But then another sector which is doing positive rounds, and the experts are quite bullish and have a lot of conviction over it, is the auto and auto ancillary space. And one of the script from the same space is Maruti Suzuki. Now the company is doing positive since the GST rate rationalization, and we have seen a good set of upsurge during various sessions. But then there's an economic indicative action and a trigger for the company, where the company is planning to have an investor meet on 25th of September, that is tomorrow. Also keep an eye on the brokerage reports which are positive for Maruti Suzuki. Recently we did see Citi's brokerage report, which was positive, where it opened a 90-day positive catalyst watch with a buy rating. And apart from this, there are other brokerage houses also which are quite bullish on Maruti Suzuki, and 16,240 with around 0.5% to 1% gains. And if you pull up the last 5 trading session charts of Maruti Suzuki, it will always see a one-side upsurge in at least the last 5 sessions, and even before that, since the time of the GST rate rationalization news came in. So Maruti Suzuki on the focus radar.
Absolutely. So that's Maruti Suzuki up nearly 1% right now. But moving on, Ravinder, you've picked out IndusInd Bank for us. The stock is trading near its day's low. What is the news flow here?
Well, IndusInd Bank is in focus on the back of brokerage note, where Citi has come out with the note, and they have maintained their sell rating with target price of rupees 765. They say that the IndusInd Bank faced elevated slippages in Q2, mainly from the MFI forwards flow, with stabilization expected in the second half of FY26, and credit cost hinge on the write-off strategy, which could keep FY26 cost high for the IndusInd Bank. And deposit rate cut offer limited relief as an adverse loan mix, and yield repricing pressure NIMs near term, and with ROA and ROE reset to 0.5% to 0.5% to and 4%. And so back of this note, Citi maintained sell rating. So back of this, IndusInd Bank is in focus.
Sell rating from Citi on IndusInd Bank, and on the back of it, the stock is also trading with downtrends. But another banks and financial category stock which is positive in trade today is AU Small Finance Bank. And couple, if you pull up The charts for last two trading sessions, just in last two trading sessions from 22nd to 24, the stock has seen an upsurge of around returns of around 5%. What's your rationale? How does the technical of AU Small Finance Bank look like?
Alright, the AU Bank has almost fallen from 840 level to the 680 level, and 680 historically has been a good turning point for the stock from past almost 2 years, and this particular point coincides with a long-term moving average like a 200-day moving average, where after the price-wise corrections it has gone through the time-wise corrections, and from past 2 to 3 trading sessions we are seeing some sorts of the upside momentum, which is indicating the bullish resumption on the high side. So right now the 741 the level the stock is on the high side. In a very short term perspective, we expect that the stock to be around the 770 level, which is what any immediate reactions points. So yes, this stock seems to be in bullish momentum for the upside of 770.
Alright, so those are the levels to track for AU Small Finance Bank. But moving on, we caught up with the CFO of V-Mart Retail, Anand Agarwal, on the GST bonanza ahead of the festive season and how it's attracting more footfalls. Let's listen in to a slice of that conversation.
From a value retailer perspective, there's not a lot of change which has happened for us in terms of the value offering, because we in any case offer almost 80% of the products at below 1,000 rupees. So that way it's not so much of a complex change for us, but from a customer sentiment point of view, it's a very big and welcome change, because just at the cusp of the start of the festive season, there is a lot of positivity around retail, around shopping, and around paying less. So from a family perspective, I think it's going to be a bit of a game changer. I'm not too sure how much of real impact will it make for retailers at the lower price points, but definitely we are anticipating and also seeing better footfalls even right from yesterday.
You're largely a value retailer and apparel is a specific focus for you. Now that the GST changes have made the 1,000 to 2,500 a very attractive segment for apparel retailers to be in, that's the one that has seen the biggest cut. How are you revising your strategy of looking at the pricing that you operate in?
So you are absolutely right. The biggest change for value retailers has been in the price segment of 1,000 rupees plus, because that is where the maximum rate benefit will accrue for the customer from a value retail perspective. So that is an area where we really did not used to have a lot of product mix. Because the tax rate were detrimental, in terms of the consumer interest. So now that the tax rates have been rationalized or substantially reduced, so that is an area where we would want to experiment and explore more, offer more, opportunities for the customer to upsell, to see. I'm not too sure what the offtake is going to be, but at least from an offering perspective, we would want to explore and offer more to the customer in that price bracket.
Hi there, welcome back to ET. Now you're watching Market Fatafat with me, Kanishka Sarkar and Mansi Dave, where this is a show where we're discussing all the top buzzers either on the back of news flow or technicals. And the next stock that couple you have picked out for us is Lodha Developers. It's trading close to the day's lowest point. It's down about 2% right now. Do you think a reversal is likely? How is it looking on the charts?
Yeah, basically in a reality space, we have been seeing that there has been a continuous selling pressures. There were some shorts of a couple of days, the upside momentum, but it is getting fizzled out at a ratios level, and again it is reverting down. So we see a reality space is on the weak counter, and within that the Lodha is the one particular stock which is also respecting every resistance and disrespecting the support. So from past 3 trading sessions also this stock is declining. Right now the 1183 is the level. So on the downside potential we see is that around 1100 to 1120 can be the downside potential, and as far as the stocks remains below the 1210 level, it will remain under the bear's grip.
Downside anticipated in Macrotech Lodha Developers. But up next on our focus radar is Oil and Natural Gas Corporation Limited, ONGC, and the stock is trading with gains of around 1.5% on the back of a news flow. The company plans and aims to acquire 2.5 to 3 gigawatt of renewable energy projects in the coming days in future. ONGC's Satyan Kumar speaks to reporters at the event where he says that ONGC seeks to secure 3 million tons per year LNG supply under a long-term deal. And also, it aims to conclude some LNG deals in 12 months. At present, if you see, it's 239 to 240 odd levels where ONGC is trading. In the session today, around 1.5% of an upsurge. And if we talk about the fundamentals of the stock, you have a lot of positives. If you see, the stock is trading with 0.87 times its book value. Stock is providing a good dividend yield of around 5.17%. And at the same time, the company is also maintaining a healthy dividend payout of around 37 to 38%. So good set of fundamentals, and on the back of news flow, ONGC is on the focus radar.
All right, that's ONGC trading more than 1% higher right now. But moving on, the next stock that we have on our list is Minda Corp. Ravinder, you have picked out the stock. The company has come up with its FY30 guidance. Take us through the contours of it.
Well, as Minda Corporation is in focus, where company has unveiled their 2030 targets, where they have highlighted that the company's revenue to rise by 3.5 times to rupees 17,500 crore from 5,100 crore in FY25, and EBITDA margin can be seen more than 12.5%, which is 11.4% as of FY25. And if we talk about net debt to equity, then company said that the net debt to equity to fall 0.3 times, nearly debt free, and ROC projected at more than 25%, which is currently 20%. And Nuvama has come out with the note, and they have maintained the buy rating, but they have had target price rupees 620 as compared to earlier target price rupees 590. They say that the premiumization focus is on smart access and cockpit electronics and EHV harness segment. They say that by FY30 PV share rises to 25%, and two-wheeler and three-wheeler drop to 40%, and CV fall to 25%. For FY26 and 28, they have revised EBITDA to by 1 to 4%. So back of this, Minda Corporation is in focus, and the stock is up more than 9%.
That's right, the stock is up nearly 9% right now. But moving on, Kapil, you have picked out Alchem Laboratories for us. What is the chart indicating for this stock? In the past month or so, it hasn't given a lot of returns. So do you think that reversal is likely?
We are seeing the bullish continuation sign in the Alchem. The thing is that since its inception, I think around the 2016 till now, so almost 8 years history, the stock has fallen by almost 5 to 6 times. And every time the stock is correcting down by 30% and it is rebounding out. So recent corrections, already 30% correction happened. It has formed the 6 months days, and now slowly, steadily it is taking off. It is not a very fast mode counter, but slow, steady. We can see some sorts of a gain in the Alchem. Right now the stock is trading at 5,580 level. On the higher side, we are seeing the upside potential up to the 5,700 level.
Thank you so much for joining with us and giving your views on the markets and your stock specific recommendation as well. And Ravinder, thank you so much for the research back details also. Well, on that note, it's a wrap on this edition of Markets Fatafat. It's a goodbye from me and Kanishka, but up next is closing trades. You stay tuned with ET Now.